this is Peter Mullins from Screedly. Welcome to another edition of Payments Dialogue. Today I have the pleasure of welcoming the co-founder of Rappi, Juan Ortega. Juan, if you don't mind, would you take a second just to introduce yourself and a bit of background to your background with Rappi?
Perfect. Thanks for the invitation, Peter. So I started Rappi. I'm part of the founding team of 4.5 years ago. And my background was actually from aviation. So I worked for airlines and I used to work for a consulting firm that specialized in airline consulting. Mm-hmm. And I met Simon, my co-founder, and we started working on developing an app that was basically able to get anything delivered really quickly. And we started with things from a convenience store and then started adding more things to the app, like restaurants, like supermarket. And today in Rappi, you can basically get anything that you want delivered in your house in less than 30 minutes. We even deliver cash in most of our cities in Latin America.
That's incredible. That's an incredible twist on things, isn't it? To deliver cash as part of your offer.
Yes.
Now tell me, when you were envisioning Rappi and before you had founded it, did you have prior experience with payments?
No, so I had zero experience with payments. Payments was a new thing that we thought was easy. So we used different gateways in Colombia. We used different gateways in Mexico. And as we grew and as things like acceptance and chargeback starting to be something significant, we started to kind of dig into payments. And that's how I started to get into payments and understanding how it worked and what were those issues that from one day gave us a 70% acceptance rate and then the next day 80%, and trying to understand what was those variables. And something that at the beginning we didn't understand that much was chargeback. So for us, we didn't know that people were able to call their bank and basically charge back payments that made. So we deliver the products, we deliver the service, and then 2 weeks later, we were being called by the banks getting these payments back. And when we started understanding all these issues, that's when we decided that, payments was something that needed kind of their own space. And I don't understand how I got there, but for some reason, I think I moved to Mexico when we started Rappi, and I opened the operation in Mexico, and there was a huge issue with the processing of the cars in Mexico that we didn't have in Colombia, and I think that was the reason why I started to get into payments.
Right.
And at first, I was just looking for a gateway and then trying to understand why one gateway was working better than the other one. And I think the most painful thing here was that making a decision to choose a gateway was super long, and it was a lot of time and a lot of effort in the technical side to first decide, and then second of all to the integration, and then to move the credit card vault.
Okay, terrific. Now, I imagine part of your thinking was around customer experience as well, and making sure that people that are purchasing through Rappi have a great experience. Is that true?
Yes, that's that. I think something that was really frustrating for clients was they went into the app, they shopped for, 10, 15 minutes, they found what they wanted, they went all the way to the checkout, they put the credit card information, and when they placed the order, the payment was declined. And for them, it's really frustrating because they say, hey, my car is active, my car is working, and in their mind is, hey, Rappi doesn't work, so I'm just going to use another app, or I'm just going to go and walk to the store because Rappi doesn't work. So we saw payments was something that was really important in the experience because it was able to completely block a purchase, and if you weren't able to pay, you weren't able to order, and people just move elsewhere.
Right.
And that was something really confusing for us because we say, hey, why, if this car is active, why is the bank declining? And that's when we started finding out that, for example, in Mexico, there are so many different variables where when the bank receives a payment. And that's why we started looking into different options to be able to retry these payments.
Okay, terrific. And I imagine when in an app like Rappi, where there must be a lot of repeat customers. You have people that are using it many times. So then for them, like or I guess for you, for losing a customer for one transaction isn't just one lost transaction. I imagine it's, that whole lifetime.
Yeah, and also, and we had customers that they had made, I don't know, 50 or sometimes up to 80 orders, and all of the transactions were accepted, and then from one day to another one, they started getting declined. So for them, it was even more frustrating saying, hey, I have used my card 80 times in Rappi, what's going on? And they call the bank, and the bank doesn't know, and it just messed up the whole experience. And in their mind, Rappi fell. Rappi didn't work. It's not that their bank declined the transaction. So we are the face in what's going on in payments, and we have to make sure every payment is accepted when it can be accepted, basically.
Terrific. Now, you'd mentioned about Mexico and Colombia. Can you tell me, just for context, for those that are not familiar with Rappi, what markets does Rappi cover?
So we are now operating in 9 different countries. So we are in Mexico, Brazil, Colombia, Costa Rica, Ecuador, Peru, Chile, Argentina, and Uruguay.
Okay, great. And those are just such rapidly growing markets. Those must be very exciting spaces to be in.
Yeah, and I think in the payment space is super interesting because it's 9 different countries that operate credit cards and debit cards in their own way. So basically everything that we develop in one country, we can really use in the next, because there are different gateways, there are different payment processors, the way they operate the cards are different. So for example, in Mexico, we use kind of like a 2-step system where we authorize the transaction at the beginning and then we capture at the end. That's something that, for example, in Colombia, we cannot do. So the local networks here only accept a purchase and a full refund. So we can even do partial refunds, which makes the operation for us super complicated. So we have to develop super flexible system that let us choose what kind of operations and how we're going to charge the cards depending on the type of orders. So it becomes super complicated at times.
Right. Yeah, I imagine. Now, in Latin America, because you're dealing with those 9 different markets, are there other aspects that, like, if a new merchant were to come to you and to say, I'm going into Latin America, are there other kind of challenges that you would advise them to look into?
Yeah, so I think the biggest challenge that they're going to have, there are like 2 main challenges. Actually, there are 3. So number 1 is acceptance. So it varies a lot by country. For example, Mexico is one of the biggest offenders, where banks are really picky and they decide whether they're going to accept a transaction or not. So you may have one day 50% acceptance rate, and the next day you're going to have 90%. And you didn't change anything, but the bank just moved the rules. And you have really big banks that will be 60% of your traffic, and if they change something, they will move your acceptance all over the place. So number 1 is acceptance, and I think for us what has been super helpful is add retry logic to your transactions. So all the soft decline, so the 0, 5 do not order, what we do is that we retry them in 2, 3, up to 4 different gateways, and what we see is that we see an increment up to 20% in acceptance, just retrying the transaction. So looking at different gateways in each market, I think is key. You shouldn't have 1, you should have at least 2 or more. Number 2 is chargebacks. So fraud is huge in Latin America. Mexico and Brazil is one of the countries with the highest rates of card not present fraud, and you have to be really careful. And it is something that happens and you didn't know it happened, and 30 days later you're just faced with thousands and hundreds of thousands of dollars in chargebacks, and you didn't know what was going on. And the problem is that is not only, and you don't only have to pay the fines, you don't only have to pay the chargebacks, but it also affects your acceptance. So if you start having a huge amount of chargebacks, next month your acceptance is going to be really low, and banks start being really picky on your MID and on your different ways you process cards. So we are now facing this new revolution of the 3D Secure 2.0, because the 1.0 didn't really work, and it didn't work. It worked for web a little bit. It didn't work really well in Latin America because many issuers didn't support it. So for example, their challenge was call your bank. So if you're using, for example, I don't know, the biggest bank here in Colombia, and you send them to a 3D 1.0 flow, what's going to happen is that they tell you to call your bank, and you're going to have to call your bank and stay in line for an hour just to validate the purchase. So if you're buying a hamburger, you're not going to do that. You're just going to hang up and walk to the store and do it.
Right.
So fighting fraud is super hard, and I think let's see how 3D Secure 2.0 does here. I think it's really promising. We have to see if it actually, now that it's in production, if it's actually is what they're promising. But using different tools like Safe Science and different companies are really helpful. So fraud is the second one. And the third one is that you have to be aware of the alternative payment methods. So countries like, for example, Brazil, a huge part of the market they all have bank accounts, but they don't have credit cards. And this is changing, and it's going to change a lot with 3DS 2.0, but up to, I don't know, a couple of months ago, you were able to process debit card payments online. So only a few merchants had that opportunity. But what the banks are doing is that they're letting merchants process all the debit cards, which is a huge. So if you take a look at the percentage of plastics issued in Brazil that are debit or credit, debit is huge. And if you don't accept it, you're missing out. So accepting debit with 3D Secure is a new way that is opening up, but then there is an alternative to that is called Boleto. And Boleto is like a bank transfer. So if you come into the market and you don't have these alternative payment methods, you're going to be losing out in a lot of potential customers. So that's another important thing that I think merchants have to take into account when they look at payments.
Okay, great. Now, really interesting, the discussion there of fraud and the chargebacks, because it is a balancing act, isn't it? Where you're wanting to have that great customer experience, but and you're trying to minimize fraud. Is that just a balancing act that you and your teams have to work through, or how do you think about that?
Yeah, so I think so you want to be at a 0 false negatives and a 0 false positive, where basically you're letting all the good customers through and you're stopping all the bad customers in, and your chargeback rate is 0. Mm-hmm. So if you ask a CEO, he says, you need to be at 0% false negative and 0% false positive. Unfortunately, it's almost impossible to have those two at 0. Mm-hmm. So you as a business, you have to make a decision. You have to say, hey, do I want to have 0% false negative and basically don't pay any chargebacks, but I'm going to have an acceptance of 60%. So basically you're declining 40% of your customers, and in those 40%, you're going to have people who are good customers, which are false positive. And that's a decision that you have to make with the business. And it's hard because you have to balance that. You have to say, okay, I'm gonna maybe increase my rules a little bit, and I know I'm gonna have false positive, and I'm gonna then have a team looking at it, at those false positive, and trying to call these customers and trying to come back again. Or maybe no, let's open up the rules and let's have more false negatives that are gonna end up in chargebacks. But at least I know I'm not blocking my good customers, because the lifetime value of my customers is huge, and if I stop one, I'm missing out more than just paying a couple of chargebacks.
Right.
And it's a balancing act, and it's something that takes time. So we use a lot of machine learning models, and unfortunately, it takes a lot of time to kind of find how these people are operating. And the crazy part is that you fix a problem today, and in 2 weeks, they found a new way of doing it. So let me give you an example. Fraud is something that is actually really fascinating here in this part of the region, because we at the beginning saw super simple patterns. So they were using the same device, they were using the same IP, they were buying the same things. And as we start blocking these things, they started becoming more sophisticated. So today we have a guy, we identify this guy, and he say, okay, this guy is fraudulent, and we're able to map out, I don't know, let's say 500 accounts tied to him. And what we see is that our different IPs, different phone numbers, different emails. So all these new fraudsters are finding ways to becoming super sophisticated, and you're not able to use that. So we have to dig deep, and in the application, we have SDKs that basically take out a lot of information. So they take information on the accelerometer, they take information on the GPS, on the precision, on the altitude, on if the phone is connected or disconnected, if the phone is in Wi-Fi or is in a cellular network. And what we see is that all these different points that add up to 100 different points are actually helping us catch these guys that are actually smarter than us. But anything you do is like playing the cat and the mouse. You fix one problem and they open another one. So you think you solve the problem and you're super happy that you fix everything, and then 2 weeks later they are doing fraud in a different way.
Right. That makes sense. Now you mentioned 3DS2 as an approach to it. So really interesting, because I think a lot of folks tend to think about 3DS2 as just simply something for Europe, but it sounds like the applications of it aren't limited to Europe at all.
Yeah. No, so Europe was the first actually region to come up with these really strict rules to stop credit card fraud, and I think it's great that these initiatives are happening, and are happening in ways where it's actually going to benefit the consumer, because no one wants to get their credit card cloned and used somewhere else. So for consumer, it's great. So what's happening in Latin? So Mexico right now, in the next month, the commission of the regulated banks are getting together, and they want to do something similar to what happened in Europe.
Yeah.
Brazil, the legislation is not moving, but banks are opening up things like debit and things that were supported in the online world using this kind of authentication. And in Colombia, we are pushing to having this because we want to find ways to authenticate people. And we have this kind of like clever way to do it. And what we do is that we charge a random amount to their credit card.
Okay.
When they get the charge, they can input it. So basically you're saying, hey, if this person has access to the account and they can see the amount we charge, basically they should be a cardholder. But the problem is that banks here are using technology of the 1980s. So when you make a purchase, you're not able to see it in your statement for like 3 days. So if you're going to buy a hamburger and we detect you're kind of fraudulent, we send you to verification, you're not going to be able to buy your hamburger for 3 days. And obviously in 3 days, you're going to forget about it and you're going to leave.
Right.
So finding ways to authenticate is extremely helpful for us, because it helps us kind of clean those false positives and eliminate the false negatives, because we can be more aggressive on the rules we apply and basically say, telling customer, hey, you wanna do this, then you're gonna go through authentication process. And for example, Chile, they have this. So Chile, they have only one network that processes cards. It's called Transbank, and it's a monopoly in the country, which has many benefits and it has many drawbacks. I hate it. I think that having monopolies just doesn't benefit merchants, but they do something that is really cool. They have a way to authenticate a user called WebPay Plus or Web One Click, something like that,
Okay.
where basically if you want to add a debit card, you go through an authentication process with your bank, and then that gives you an authentication to that card. So when you go through that process, first of all, your acceptance is amazing because they're going to bypass all the fraud rules. And second of all, the user is the person using that credit card had to go through a really strict verification process with their bank, and basically they're not going to be fraudulent, which is something that 3DS2 wants to accomplish. They want to basically use a lot of information, a lot of data to decide whether the cardholder is making the purchase or not, and if they're not sure, they're going to send you to the challenge.
Mm-hmm. Okay, great. Now, you'd mentioned one of your suggestions for merchants that are coming into Latin America is to work with multiple gateways. I mean, we seem to see that a lot, as you can imagine, with Spreedly looking to minimize complexity for customers, right? Integrating with multiple gateways. So, really good advice there.
Yeah, and we work in 9 different countries, and we operate with 15 different gateways, and we love it. Like we it's so flexible, and we built a system in our side that is simple but complex at the same time. That what basically let us is route transaction dynamically by BIN, by type of purchase, by country of issuance, and all these different metrics. There is no silver bullet on increasing acceptance. You have so many factors where you have to plug and play different things. You have to say, hey, this gateway is doing really well in Visa, but maybe this one is doing really well in MasterCard. And maybe the fees here are better in Visa, but here in very MasterCard. So when you put all these things into account, cost, acceptance, how are you charged back, you basically we basically build a routing that will optimize the business, and it could be with 2 gateways. Sometimes we use 5 different gateways, and what we want to do is that when people pay, they don't know these things are happening in the back. They're just getting the payment accepted, which before they couldn't. So it's great.
Yeah, so just giving that, again, coming back to that great customer experience and getting it closer to that maximum success rate. Yeah, I think for us, we always talk about flexibility and the importance of building flexibility into your payment stack. I definitely know that's your approach, and it certainly sounds like it.
Yeah, and and another thing that you have also, like we get approached by gateways all the time and by PSPs, and they say, hey, we have this thing, it's amazing, you have to try it. And before we couldn't. Before it was, hey, if we want to trust them, we have to do this whole change, transfer votes. It's going to take so long that at the end we say, hey, you sound amazing, but unfortunately, it's so much effort that we don't want to do it. Today, when a gateway comes to me, I say, hey, can you please give me the API keys, and I will send you 1% traffic, and we're going to see how you guys are doing.
Right.
And these have been really helpful for different gateways. That we have gateways that the first day you see huge increase in acceptance, and we say, okay, you got 1%, let me give you 2%, let me give you 5%, and right now they're at 50% of the traffic. So this is helpful for both of us, for us as merchants and also a PSP to prove what they're saying and to test different gateways. But because right now, if you have 3 different PSPs and you can try them, the 3 side by side,
yeah,
pricing, chargebacks, everything, you're going to make a better decision when you have to make it without trying them. And you're not PCI like many merchants are. Even if you're PCI, just doing the connection, just doing the test, just doing all these things, it takes so long that when you finish, if it doesn't work, there is no way you're going to go back because you wasted so much time doing it that you're going to say, okay, whatever is not what they promised, but it's working. So let's leave it there. With Spritly, we can play around and we can say, hey, your guys are not performing. And cut the traffic right away. So you have to.
I think that's a great perspective because for gateways, it allows the gateways that know that they're have confidence in their abilities, confidence in the functionality. It allows them to rise to the top, right?
Yeah. Yeah.
Terrific. Well, before I let you go, I just want to say thank you so much for taking time. This has been a great conversation. One thing I did want to ask you about though is. We just got back from Payments Ed Forum, a big conference on payments, and they were talking about some of the innovation that Rappi's doing around payments and for individual payments. And just curious if there's anything else from a payments topic you'd like to mention that it would be interesting for the listeners.
Yeah. So in Rappi, around a year ago, we started this new line of business that is called Rappi Pay. And Rappi Pay, we want to be the biggest bank in the region. And the idea was first to do what Venmo does in the US, and they do really well. And what we saw was that the opportunity was huge. So we started this QR payment system that we're basically onboarding anyone that can accept payments online, but before they didn't want to do it with credit cards because it took too long to get the money or it was just too costly. We basically bring them a way to accept payments immediately, electronically, and they get the funds right away. So we're working on that. We're issuing a debit card in all these different countries, and the idea is that today, for example, in Mexico, 85% of transactions below $30 are done in cash. And this is done because most of the population are unbanked and they don't want to pay with debit cards because they're afraid of banks and different things. And what we want to do is that we want to make it as easy as possible to open a bank account. And today in Mexico, you can open your account in 3 easy steps. You take a picture of your identification, you take a picture of yourself, and that's the only thing you need to open an account. Which compared to a bank, you have to go, it takes hours to do it, and people just don't want to hassle to that. So we want to make it as simple to order a debit card that it is to order a hamburger. And right now we're delivering thousands of cards in less than 30 minutes in Mexico City.
That's incredible. That is truly incredible. Well, terrific. Juan, this has been a real pleasure for me. Really enjoyed the conversation, and definitely thank you for your time. And we'll be having more payments dialogues coming up soon. But again, I want to say thank you to all the listeners. Thank you to Juan Ortega, who's co-founder of Rappi, and for his time. And we'll be seeing you soon on another edition of Payments Dialogue. So Juan, again, thank you.
All right. Thank you.